This is Chicago's Morning Answer with Dan Proft on AM 560. The Answer.
Top of the morning, Dan Proft here. So the Department of Justice has formally opened a criminal investigation into Fed Reserve Governor Lisa Cook, Biden appointee, fired by President Trump amid allegations of mortgage fraud, referred to the Department of Justice by Bill Pulte over at Housing Finance Authority. And, of course, this is a part of Trump's takeover of the Fed, allegedly. First of all, I think they got Lisa Cook dead to rights, and I'm not the only one. Elie Honig, who is the legal analyst for CNN, had this, and he was no fan of President Trump. He works for CNN, did I mention? Had this to say about the case against Lisa Cook.
I've seen this before, and that's why my European friends told me before Trump was elected not to make fun of what was happening, to take very seriously what was happening, because they've had recent skirmishes with fascism. They know the impact of fascism, and this guy is definitely a fascist and embraces that, and will sow divisions in this country that that will take a long time to mend.
Okay, well, that was Lisa Cook a couple of years ago calling Trump a fascist, and so this is being used to say, oh, she called him a fascist, and so this is his, retribution for that. Well, she wasn't even on his radar until Pulte raised the issue of her multiple primary residences, all three of them. And Elie Honig just went through it on CNN. I'm searching for the clip, but and just basically said, look, I mean, this is a case. And when you're, as our friend Jim Perry will tell us in a minute, when you're applying for a mortgage and you've got a primary residence, you get better treatment, as we talked about when this case first broke. And she did it 3 times in different jurisdictions over a short period of time, which is saving her points on all of these loans and, potentially tens or hundreds of thousands of dollars over the life of a loan. I mean, it's material dollars that she is benefiting. And as a Fed board governor, I don't think like clerical error, paperwork, I didn't know. I don't think, I was ignorant of the complications with respect to, laws governing mortgages and borrowing. I don't think that's going to wash. Maybe it's a paperwork issue 1 time, 3 times in 3 different places. For more on this and other financial matters, pleased to be joined by Jim Perry, founder, CIO, Perry International Capital Partners. Jim, thanks for joining us. Appreciate it.
You are welcome. Good morning.
So, the Lisa Cook thing in the context of it's, he's politicizing the Fed. It's a takeover of the Fed. This is Trump's gambit to depose Powell and so on and so forth.
Right. The Fed is very political. Anybody that thinks it's not doesn't look at the facts. And it is very independent, too, and it'll continue to be independent. And the idea that Trump is actually going to try to take over the Fed is just absurd.
Well, and again, the Lisa Cook case, too, is, this, like, primary residence, and you do it twice and you do it 3 times, and that's called mortgage fraud. And she's not going to be the first person ever prosecuted under the law for that.
That's right. And she won't be the first Fed official who's had to leave a job, right? I mean, there's been insider trading, and when they get caught, they should get caught if they're breaking the law. And it appears that she has. So I think the case is quite clear, and she actually has been fired, correct?
Yeah, she's been fired. She's
been
suing.
Fired.
Yeah, she's
right.
suing.
So that's going to fall apart. So you're going to get a new Fed governor, it looks like, which is good because Trump wants it to be more political. He wants to take control of it from a philosophical standpoint.
Yeah, but who doesn't? What president doesn't want people that are philosophically aligned with them?
Absolutely.
At the Fed Board of Governors or the Fed chairman? Every single one? I mean, every single one wants that.
Right.
For every agency, for every post,
Sure.
I mean, you want people aligned with the mission, and
Right.
so
this is not a new story.
No, and oh, by the way, we're talking about 15-year terms here. So she's either too stupid to be on the Fed board or too corrupt. You can choose which one it is,
Or both.
or both.
Right.
All right, let's talk about the jobs numbers. As you heard, top of the hour, 22,000 jobs created in August. Seemingly a rather anemic number, but yet the market continues to roar. So. With the tick up by 1/10 of a point in the jobless rate, does that mean anything other than for those people who are unemployed?
No, it doesn't mean anything. 4.3, 4.4. The unemployment rate is still pretty low. What's interesting, and I've come on this show after the non-farm payroll number for a period of time, it's more interesting now than normal. And the reason for that is that, the Bureau of Labor Statistics officials have been fired. Powell is out at Jackson Hole, and as you know, the Fed's got a dual mandate, right? It's inflation and the employment report, so balance for everybody. And they're kind of letting the inflation part of it go. And what's interesting about the employment part of the Fed's mandate is that, and a lot of people don't know this, but I think it's important. The Kansas City Fed does a symposium in Jackson Hole since the Volcker years. And they always have a theme, right? So the main subject matter of the symposium was the employment part of the economy as we go into a new sort of AI revolution, and what's it mean for, the average guy. So the whole symposium was about the labor market. And, these guys that go there, they're econometric sort of noodleheads that kind of swap research papers, right? So the fact that Powell was talking about the labor market in a different way, that it's curious now, anybody that really kind of came away from Powell's speech at Jackson Hole and has an opinion about rate cuts or not, to me, it was pretty neutral, quite honestly. And if you really come away from it with the idea that the Fed's going to cut, and many people do want that and need that. Every real estate developer and anybody that wants a mortgage and the whole financial industry. So everyone's clamoring for this cut. But
but I mean, do you think it comes next month or this month? I should say
17th. Yeah. The futures market says yes. There's a lot of data that comes first. If it's going to be just about labor, and Powell's a political guy, and he doesn't want to dump the economy into a recession, they're going to do it. They're going to do something. Does the economy really need it? I don't think so. There's so much money out there, and the stock market continues to roll ahead because there's so much fiscal dominance, fiscal stimulus in the system. So the financial system and the economy don't really need more money, more stimulus from the Fed.
There's so much fiscal stimulus in the system, meaning all the Fed asset purchases, meaning still leftover funny money from the federal government.
Correct.
Combination of the two.
Correct. And if you look at some of these numbers, money supply, for example, right? And if you just think about the last 15 years from the great financial crisis, money supply has quadrupled, right? It's gone to $30 trillion, right, from 8. And the Fed's balance sheet is at $7 trillion. 15 years ago, it was less than 1. And, just deficit spending's $2 trillion, right? So you've got $3.5 trillion worth of excess bank reserves. You've got another $3 trillion sitting in the Treasury that's been allocated but not distributed, and money supplies out there. So, everybody who doesn't need to borrow and has access to funding from a standpoint of like direct funding, money's cheap. If you need to borrow, you can't. And that's the problem. The real problem is that the middle class, that 35-year-old kid that wants to buy a house because he's got 2 kids, they can't get mortgages. Home prices are at all-time highs still. Automobile prices are all-time highs. And everybody in the country is looking at prices, cost of living is up 50% in the last 4 years. And that's a problem still.
And so the cost of borrowing. So then for startups, are we going to start seeing IPOs again?
I get.
Or is it all going to still be private equity?
Yeah, I get that question a lot, and I think it's private equity. I don't believe that small companies need to go into the public markets with all that scrutiny. They have to worry about, internal cash flows and free cash flows and people pulling out. So I think the private equity and the private debt markets are going to continue to grow quicker than the IPO market.
You mentioned the stock market generally. So this piece in the Journal earlier in the week, the most expensive stock market in its history. And, the suggestion is, are we blowing up a bubble that is going to burst at some point, particularly because so much of the increase in valuation is attributed to the Magnificent Seven?
Yeah, it really is. I mean, I think it's very easy to lean back and look at history and say, boy, nothing more expensive, .com boom and all that sort of stuff.
Right.
But I think I still like the stock market. I think there's a lot of money out there. I think the stock market's going to continue to do well. I think the economy is going to continue to do well. And I think that, if you look at the price earnings multiple of a stock, and you can't just look at NVIDIA or, Meta or something like that, but the earnings that are coming out of these big mega scalers are just enormous, right? I mean, NVIDIA's, revenues were up over 50% and their profit margins are at 75% and, net income is up 22% or something like that. And they're not alone. It's the top 10 or 15 guys out there. So what's happening to the economy is that these big hyperscalers don't have to borrow money. And any new technology that might help them get a bigger footprint, they're buying them, right? So I think I saw of the Mag 7 this year, those guys have bought 850 different businesses, right? 850. So the footprint and the market dominance of these guys is getting bigger and bigger. So the big companies are getting larger, which is not unusual. It happens in Japan, happens in Europe. So I think you're seeing a real change in the economy, and the whole world's getting much more productive. You don't need as many employees, and earnings in these big companies are continuing to rise. Q2 earnings, Dan, revenues in the S&P 500 were up 13%. And that's very unusual. That's a big, big number. And it was 12% last quarter, right? So this is not a one-off deal. So the revenues of these big, big companies are getting bigger and bigger because they are able to raise prices because people are willing to pay them because they're afraid of prices going up higher. Inflation's still the problem.
So are there any foreseeable headwinds for these companies?
I think the big question, and Ken Griffin was talking about this, he was on the cover of Barron's last week, and he said, the real question is, is AI going to be the real story that we see that everybody believes it to be? Is productivity going to go up? Are earnings going to go up? Is this going to help drive the economy? And I would say in the short answer, I think it is. I think AI is really helping a lot of small businesses, and they are reducing costs across the board: healthcare, legal, education, finance, logistics. Companies are cutting costs because of AI, and they're willing to pay the Microsofts and the Metas of the world more for a subscription to get this kind of AI-driven data that helps them become more efficient. So I think the AI revolution is real. I think the spending on AI is legitimate. I think last year it was about $2 trillion of all businesses. It's expected to be, $10 trillion in the next 4 years. This is a huge number. GDP is 30, right? So a third of GDP is for the AI build out. And that's across the board, right? That's energy,
right?
That's coding, that's power, that's chips, it's everything. So I really think the AI-driven economy will continue to be the dominant feature of our lives over the next decade or two or three.
But that's not to say there aren't hedgers out there, because I also note that gold is at an all-time high. And it can't just be the gold bugs that are responsible for that.
I think gold has made another new high as crypto continues to do well as well. And the reason they're doing it is they're great hedges against a financial system that really is never going to be able to fix itself, right? I mean, national debt's $38 trillion, right? How are you going to get that down? I think they're going to keep letting it go. China does it. Europe does it. Now we're doing it. We're not alone. It's not just the United States. So I think the risk is gold continues to do well, crypto continues to do well because they are a hedge against a financial system that is not going to be able to survive in its current form in the years ahead.
Well, I mean that's a big statement. I mean, not being able to survive in its current form. This is the AI. This is part of the AI revolution too, right? The singular balance sheets, kind of developed paradigm shift, I guess, is the better way to put it.
Yeah, I mean, you look at this guy Stephen Murin, right, and Scott Bessent. You've talked about this sort of Mar-a-Lago Accord. What these guys are really thinking about is readjusting the global financial system in a way that allows a more equitable flow between regions of the world that is better for this country, right? And get government out of it. And I don't know how it's going to turn out, but because there's so much uncertainty with the banking system, which, by the way, is incredibly profitable right now, right? This banking system, U.S. financial system, dominates the world. The J.P. Morgans, the Morgan Stanleys, Goldman Sachs, these guys are just behemoths. They're doing great. They're the best investment banks, not only here, but in Europe and Asia. So these guys are making a lot of money. Financial engineering's a real deal. I was talking about Ken Griffin earlier. Citadel is a tremendously profitable organization, and it's all high-frequency trading, right? It's just all data, and they've got something like 270 PhDs, and they're making, 19%, 20% on their money every year. The Fed's got 2,000 PhDs and doesn't know how to get to break even, right? So the world is changing.
Different incentive structure, too. Right. They have something to do with it.
Correct.
Just on the banking, I guess my question, the vision for what that looks like to, I hate to use this metaphor, but Main Street, right? I mean, it's interesting to hear that the big guys are doing so well, and of course all those people that are associated with those organizations and all the business they throw off. So I mean, it has definitely a ripple effect. But the people that are struggling under the higher 50% increase in the cost of living that you described earlier, and what the future looks like for them in a workaday job where you're making, I don't know, 80 to 100 grand, and you got 2 kids you're trying to get through school and through college, and how do you make it with the cost of living going up at the pace it is?
Yeah, it's incredible. I mean, it's a real strain. I've got 4 kids, and when you get through at the end of the day taking care of everything that you need to take care of as a parent, the financial pressures on the average household are really tremendous, and it's really hurting. So, again, this is sort of a more philosophical sort of discussion that we normally have, but the bifurcation of wealth and non-wealth is really getting worse and worse, and that's the biggest problem. And I think there's gonna have to be a realignment of some kind, because that's not going to come back by itself, right? The people who have money, who have assets, they don't care about inflation, right? Their properties are going up in value and their portfolio is going up in value. But if you don't own anything and you can't buy a house, you look at rents. I mean, my kids are all paying rent. The rents in the city of Chicago are at all-time highs. Mm-hmm. And it's not just Chicago. It's New York and Denver and Miami and New Orleans, and it's everywhere. So you cannot get ahead. Free cash flow, disposable income at the household level is under tremendous strain for a huge portion of the population. So how are we going to adjust that to make it more equitable so that politicians appear to be sensitive and aware of the changes that need to happen in society to make this a more stable economy and a more stable society? And the answers are not here yet. And I'm not so sure that cutting rates necessarily helps, right? It helps the banks and it helps real estate guys. But does it help the 35-year-old kid that's paying, twice as much for rent this year than he was 2 years ago with 2 kids, or 1, or can't even have kids because it's too expensive to do it? I'm not so sure that more inflation is necessarily the right way to go, knowing that the financial system is loving it, and my real estate friends and financial friends are going to, get angry at me for saying this stuff. But more stimulus is going to make the situation worse, not better.
Jim Perry, founder, CIO, Perry International Capital Partners, joining us in studio. Jim, thank you as always. Appreciate it.
Thanks, Dan. Have a good weekend.
You too.
Before you see it on TV, share it on Facebook, or read about it in the paper. Hear it here first. This is Chicago's Morning Answer on AM 560. The Answer.
$5,000. That's the average amount of money people in the U.S. are now spending on gas in a year. $5,000. That's crazy. If you drive, you have to download Upside, the free app that gives you cash back every time you get gas. That's right. You can